Hey guys, it's Wooly from Panda.com. Welcome back. I really hope everybody's safe. Right now, like the winter is just, depending on where you are, it's just awful for a lot of people. So if you're in the States, I'm right there with you. I'm shoveling, and it's really tough right now. But anyway, let's get back to the markets for a little bit. I just want to go over topic of stability versus volatility, because I'm going over my portfolio right now, and I'm also talking to people close to me about like what they're trying to do, because I think a lot of I guess like folks that are like on the older side, kind of like boomers and older Gen Xers, or they're kind of like stuck right now, like they're having some trouble. Meanwhile, like younger Gen Xers and millennials and Gen Zs, I think they're doing okay, because I guess like they don't have any like mental baggage from like prior like crashes and things like that. So I think they're like willing to be like a little bit more flexible. So they're just like going for it. Like it's pretty nuts. I'm pretty happy that people are learning, but I also want to warn people that like, there could be a like a correction or like a crash coming soon. So I guess like kind of brace yourself for like some volatility. So I want to try to help as many people as I can. So for example, like right now for me, I'm trying to find a good mix of like dividend paying stocks versus like really like high flying growth stocks to kind of balance out like the return. Because right now, like I want to at least outpace inflation, so that I can prepare myself for, I guess maybe like an early retirement. Maybe I'll talk more about that in the next video. Like you need like some stable, or relatively stable, assets in your portfolio, so that you can get some like more reliable income. Right now, like we're in a really good spot where like you can buy almost anything or buy almost any call option, and it'll pay off like quite well depending on what you buy. So my concern is the like you can buy anything type of market. It won't last forever. At some point, like people are gonna run out of cash, or even worse, like they're right now people are leveraging the portfolio. They're using all types of either regular margin, portfolio margin, or just buying like out of the money calls to leverage their portfolio a bit. And even with like certain cryptocurrencies, there are ways to leverage your trades, and it's like I'm a little nervous about that, because that's when like really bad things start to happen. But the worst part about that is like during a market crash, like everything is sold off so that people can pay back the debt, or like try to get some like preserve some cash just for like everyday living expenses. So that's why, like if you look back at some of my older videos regarding like Wheel of Fortune and Dividend Aristocrats and all that kind of good stuff, that's why like those should be kind of like your like the cornerstone of your portfolio. And even for myself in my own portfolio, like I wasn't expecting like the rate of change for those high growing like growth stocks. It just like went above like my expectations. So right now my portfolio is a little lopsided, where it's like almost like 75 to 80% of like the performance is just because of those high growing like crazy stocks. And I'm starting to like sell down some of them to balance it out, because I want at least for myself, I want like a good mix. Like for me right now it's 50-50, and as I get older I want more like income creating, like either stocks or some other type of investment. It could be maybe like a rental home, or maybe some bonds, if depending if they're cheap enough. And I'll also maybe discuss in the future, maybe like maybe some preferred stocks, or like master limited partnerships, depending if there's any demand. Because right now like nobody really cares about like dividends and like selling covered calls as much, because like like right now we're just in that type of environment where like you can throw a dart at like any stock and it'll just go up, and like people just like just piling in, and it's like creating like this like positive feedback loop. It's like, or like I guess like a virtuous cycle where people like seeing like all these type of crazy gains, so they jump in, and it keeps pushing like the prices up. So right now, like I can't. It's really tough because I can't find any like good deals. Even with dividend paying stocks, like they're like I don't want to overpay, so that's why for now like the volatility is pretty good. So that like even if you sell like put options, like even with like a lower implied volatility, right, you're still okay. You should still be able to pull out maybe between 10 to 20%, even if just you're just selling put options. But like I've noticed like it's getting the put option, like the premium that you're getting, it's getting really too tight. Back in March 2020, like and for like maybe like a few months afterwards, like because of, like the VIX was just like 80%, you could sell put options almost anything, and like you're almost guaranteed like really good returns. But at the same time, at the time like people were scared. So now we're like the opposite, where it's almost March 2021, so almost like a year later. We could see maybe like another correction, maybe not as deep, just because like there's so many people piled in, and like I don't think they quite know what they're doing yet. But once they figure it out, then like maybe after a crash, like, or maybe like a correction, then they'll start piling back in and start gaming the system, and then after that, maybe later 2021, early 2022 is when we will see like a really like the start of a really big correction. Just because I think almost everybody is in at this point. And there's only like so many places you can put your money for now, where it's still relatively stable. So I'm kind of like for right now, I'm preparing myself mentally for at least like a 10% correction, and then maybe that I can take like the cash position in my portfolio and start slowly selling cash secured puts on like quality dividend paying companies, and then we'll see how we could go from there. Like for me, like I want to keep like a good balance, like right now, of 50% like more stable companies, and then 50% like volatile companies, because I don't want to give up my upside just yet. I want to see like how far I can push it, because if everything goes well, like maybe I can start thinking about like early retirement. And it depends on like your age and like what you're trying to get out of the market. Maybe like if you're starting out, I'm not a financial advisor, so I can't tell you what to do. But like if I was a young kid again, like I'd probably just go for it. Just like go for like almost like 90% like highly volatile like names, and like 10% like some dividend paying stocks, just to like help pay the bills and stuff like that. But then like if I were like a like an older person, like 65 and above, and I'm like it's time for me to fully retire. I can't like keep messing around with crazy stocks. So it'll probably be like almost like the opposite, where it'd be like 90% like dividend paying stocks, and then like 10% like maybe just to play around with and keep my mind engaged. So that would how I would personally do things. And then of course, like I always say, like, it's your money. It's you have to kind of decide for yourself what's the best thing to do. And I can kind of maybe give you my like where I would do things, and then if you are happy to follow along, that's great. But like at the end of the day, it's still your choice and your responsibility. So so maybe in the next video, like I'll maybe talk about more about, I guess, maybe like potential retirement plans. So I hope you'll stay tuned, and if you can consider giving this video a like and maybe subscribing, that'd be great. And I'll see you in the next video. Thank you. Have a great one.